A warm welcome to you, my dear children, my dear students. Today we meet again with the 2017 paper, first paper, last part. In this video, I'm going to end the 2017 first paper from 31st question up to 40th, right? So 30 to 40, the last 10 questions. Starting from 31 to 40, last 10 questions. Yeah. So 2017 paper, 2017 paper, 2017 first paper, 30 to 40, question number 31 to 40, last 10 questions. Right, here we go. Question number 31. Select the correct answer for the following blank. There is a blank. This is the blank. We have direct material cost plus direct labor cost. Direct material, direct labor, and direct other cost. So here, as you may remember, here children, this is a lesson that we have done. We did the production cost statement of production cost. Who's saying no? Who's saying no? Are you saying no? No. We did the production cost statement of production cost. And there we learned that the addition total of all the direct costs, total is what? Total of all the direct costs is what? Direct material, direct labor, and direct other. This is prime cost. So prime cost plus what makes the total cost? Prime cost plus overhead cost. That's right. So this blank is overhead cost. This blank is overhead cost. This blank is the overhead cost. Okay. Now it's not a blank anymore. We can fill it, and we know prime cost should be added to overhead cost. Then it becomes total production cost. Answer is what? Answer is, here we have production overhead cost. We have it here. Next one. The expenditure of rupees 8,000 spent on purchase of clay. Spent on purchase of clay. By a business which produces bricks. That's what they say, right? Purchase of clay by a business which produces bricks. Right? Clay means matti, no? You know, they're doing matti work, matti weather. Right? They must be producing pots and, clay pots and clay matti wala and bricks and, which produces bricks, mainly bricks using clay, right? Bricks. That 8,000 which is spent on the purchasing of clay, which is spent on purchasing of clay is a part of what cost? Of course, we know that prime cost, which is mentioned here on the above question 2, the prime cost includes direct materials, direct labor and direct other costs. The prime cost is the addition of all direct costs. And we know that direct materials are the main materials which are utilized or which are used for the production of the good. Main material is called the direct material. So when producing clay bricks, what is the main material? Clay. Then clay is the direct material. We have answers. Primary cost of that business. The 8,000 spent on clay, direct material cost, is a part of what? It is a part of what? Is it a part of? Is a part of. It's a part of what? Is it a part of prime cost? Is it a part of the production overhead cost? No. Indirect cost? No. Indirect material? No. Direct material is a part of prime cost. Answer is this. Primary cost means prime cost. Moving on. Let's go. 33rd question. On 1st of January 2015, a machine was purchased for 600,000. 600,000 was the cost of the machine. Okay. Machine was purchased for 600,000. Right. The cost of the machine was 600,000. Effective lifetime of the machine was 5 years. It's expected to be used for 5 years. The machine is expected, this machine is expected to be used for 5 years, right? That is the effective lifetime. At the end of the lifetime, scrap value of the machine was 100,000. End of the 5 years, the machine will be rusted and busted. The production capability, in simple terms, simply saying, the machine will not be able to produce anymore. The maximum number of units or the items, number of items which the machine can produce, has been produced. So the machine is now useless. Okay. Example, TV, LED TV. They say how many hours of watch time the LED TV has. Your LED TV at home, the TV that you are watching, that TV will work for maximum 2 years, maybe 3 years. During those 3 years, you have watched the maximum number of hours the TV can display the channels to you. The maximum number of hours the TV can display the hours. Likewise, this machine can produce for a period of 5 years. After that, the machine is useless. Like your LED TV will go, it will go blank. I don't know whether it's going to go blank. I have seen LED TVs, after like 2-3 years, the screen becomes, whitish. Screen, when you turn on the TV, it's the channels are playing, but the screen is like, white, foggy. It happens, right? I don't know, maybe it has happened to you also. That means the useful lifetime, the watch hours, how many number of hours is over. Likewise, after 5 years time, the machine is useless. This machine, not your TV. But after even the lifetime is over, the scrap value, we have learnt about these things. The scrap value is 100,000, which means the machine after 5 years can be sold for 400,000. 400,000. Scrap value means that. යකඩ බරට හරි විකුණන්න. යකඩට හරි විකුණන්න. Like you sell the machine, now the machine is useless. You can't produce, the machine is not working. The machine is not, putting out the items, the products. It has stopped. Machine has stopped working. But the machine is a big thing. It has a lot of metal and other parts which are useful for somebody else. So you sell the machine for 100,000. Come, take it. It was worth 500,000, 600,000, but now we are done with it. So even for 100,000, I'll let you take it. Agreed. Give me 100,000, take the machine. Likewise. Right? How much is the accumulated depreciation that should be indicated in the statement of financial position as at 31st 12th? Okay. Now, two things that you have to notice here. Two things you have to notice. Purchase date was 1st January 2015. Okay. So, from 1st January 2015 to 31st December 2015, 1 year. That means the 2015 year, 1 year. Second year is 2016. Right? So, 2 years, 2015 and 2016. They are asking the accumulated depreciation, which means how much is the total accumulated added depreciation for the 2 years. It's easy. We know the formula. Right? So, use the formula. Formula is formula for annual depreciation. I want you to calculate annual depreciation. Annual depreciation equals cost minus scrap value. Cost minus scrap value. Scrap value divided by useful, you know that, right? Divided by useful lifetime, useful years, useful life. Okay, so now we can apply the figures, given figures. Yeah, can apply the given figures. What are the given figures? Do we know the cost of the machine? We know the cost of the machine, right? 1st January 2015, a machine was purchased for 600,000. Cost is 600,000. Do we know the scrap value? Yeah, at the end of the lifetime, scrap value is 100,000. See? Scrap value is 100,000. We know the scrap value, 100,000. So, minus scrap value is minus 100,000. Minus 100,000. Divided by useful years. We know the useful years. Don't we know the useful years? We know the useful years. Useful years given 5 years. See? 5. And the answer is how much? Annual depreciation is 600 minus 100 is 500,000. 500,000 divided by 5. 100,000. 100,000 is the annual depreciation per year. Per year. Annual means per year. 1 year, 100,000. Annual depreciation is this much. 100,000. For 2 years, 100,000. Easy. Do we have the answer? We have the answer. Where is it? It's here, 200,000. 200,000 is the answer. Next question. Ensuring the building of the business on 1st July 2016. January, February, March, April, May, June, July, 7th month. I should bring a calendar next time. Ensuring the building of the business on 1st July 2016 for rupees 18,000 has been paid on the same day. I don't know. They have paid the full amount on the same day. Yeah. On the same day means business insured the building on 1st July, paid the full amount 18,000 on that day for the whole year. Okay. Remember, this is 2016 July 1st, paid for the whole year. Okay. Yeah. Then annual insurance fee, as annual insurance fee. Okay. Then select the correct statement with regard to the above case. Correct statement regarding the above case. This is annual insurance. Insurance, everybody needs insurance. It's a supporting service. For the insurance cover, you have to pay for the whole year from the starting date. This business has paid for the whole year, for the 12 months. Okay. Right. But paid on 1st July. 18,000 paid for the whole year, 12 months. Okay. What are they saying? Insurance fee indicated in the statement of financial position. No, statement of profit or loss for the year ended 31st December was 18,000. That is the problem. That is the problem. That is the problem. They have paid on 1st July. Here, 1st July. 1st July they have paid. Okay. Asking about asking us how much should be included in the profit or loss statement on 31st December. 31st December. See. Now, can we mention the 18,000, the entire amount paid on 1st of July 2016? The entire 18,000 can be mentioned in the profit or loss as the annual insurance expenses. The annual insurance expense for the year ended 31st December 2016. Can we? I don't know whether you understand this or not. Let me make it very clear to you. Okay, this is the year. Can you see the year? This is the year. Okay, year starts from 1st of January. Okay, ends from, let's say, January, February, March, April, May, June, July, August, September, October, November, December. This is your year, 2016. 2016. Okay. Starting from 2016, 1st of January. This is 2016. This is January. This is December. This is January. This is December. 31st. Okay. This is 1st of January. 1st of January, 31st of December. But the insurance has been paid on insuring the building of the business on 1st of July. Insurance has been paid on 1st of July. No, it has been paid on 1st of July. Let's say this is January. This is January. So this is February, March, April, May, June, and this is July. This is the point they have taken insurance. July, 1st of July. Okay. 1st of July they have taken insurance. So how many months? 1, 2, 3, 4, 5, 6 months. 6 months until 31st of December. Until 31st of December, 6 months. Until here, 6 months only. 1, 2, 3, 4, 5, 6 months. Got it? This period is the accounting period of 2016 that was covered from the insurance. I'm just telling you very simply, the insurance policy was taken on 1st of July, that is here, okay, this cross, 1st of July, okay, 1st of July. From 1st of July until 31st of December, how many months? 1st of July means you should count the July month. 1st of July means July month is included. So July, August, September, October, November, December. From July 1st, 6 months are there. Right? 6 months are there now. July, August, September, October, November, December. 6 months are there. So for the year 2000, for the year ended on 31st of December 2016, only 6 months is relevant. This is the accrual concept. You know, accrual concept say paid or not in money, it doesn't matter, but only the expenses relevant for that accounting year must be included in the financial statements, in the profit or loss statement when calculating profit. Only the relevant expense should be included. So this entire 18,000 is not relevant for the year. Exactly, that is exactly what I'm saying. 1st of July paid, so from 1st of July until 31st of December, only 6 months is relevant from this insurance, from this paid insurance for this year. Got it? So what we do is 18,000 we divide by 12 and we take 1 month's insurance. Let's do that. 18,000 divided by 12. Let's do that. 18,000 for the whole year, no? Annual, no? See, has been paid on the same day, annual insurance. So this 18,000 is for the whole year. They have paid for a whole year. Okay, 18,000 divided by 12. We take 1 month's insurance. That is 18,000 divided by 12 means it's 1,500, right? 1,500 for 1 month. So for 6 months, 6 months here, 6 months. No? 6 months. No? For 6 months, you multiply that by 6. 6 months is relevant for this year. So for this year, you multiply by 6 months and take 9,000. That is the relevant insurance from the 18,000 entire insurance expense. The relevant amount for this year only 9,000. Insurance fee indicated in the statement of profit and loss for the year ended 31st December 2016 is 18,000. It's wrong. It's not 18,000. For the year ended 2016 December 31st, for that year, only 6 months is relevant, right? 6 months is relevant from the paid date until 31st of December, because this is the end of the year. End of the year. I have explained this enough, right? Yeah. All right. So for the 6 months, it's 9,000. For that year, for this year, only 9,000 is relevant, not 18,000. Accrued insurance fee as at 31st December 2016 is 9,000. Accrued? There is no accrued. There is no accrued. There is no accrued. There is no accrued. For the year 2016, for this year, right? Insurance was paid on 1st of July. So July, August, September, October, November, December, 6 months was actually covered from the insurance 18,000. That means half of that 18,000 is relevant for this year. 18,000 was paid for 1 year. Only 6 months was covered in this year, in the 2016 year, because from 31st December 2016 is over. So from July 1st to 31st December, only 6 months for this year. That means the insurance was not accrued actually. It was prepaid, paid in advance, because 18,000 was paid. Yeah. So this is also wrong. Current liabilities as at 31st. Current liabilities as at 31st December 9,000. No, it's not a current liability. Prepaid insurance fee as at 31st December was 9,000. Yeah. Yeah, because 18,000 was paid. 18,000 was paid. Only 9,000 was relevant for this year. That other 9,000 is prepaid. Answer is this. Well, that is too much explanation for you. Too much. Yes, let's move on. Well, what is this? We have the 35th question given out of the financial statements lesson from 35th, 36th, 7, 8, 39 and 40. Those questions come from financial statements. Right, so we have here 35th question. Before that, let's study the financial statements given to us. It's not a trial balance. It's not. They have changed. The way they give the questions. Normally they give the questions from a trial balance. You know what I'm saying? From question number 35 up to 40, the questions are given from financial statements, from the lesson financial statements and adjustments. But the questions are normally given with a trial balance. Now here in this year, in this paper, it's not a trial balance. They have given a full set of financial statements. The profit or loss and the statement of financial position also given. We don't know. Let's see what we have to do. We should use the following information. That means the information in these financial statements. And we have to answer the questions. 35 to 40. Yep. 35 to 40. Following are the financial statements prepared for the year 2016 by a trainee accounts clerk. When they say prepared, the financial statements were prepared by a trainee accounts clerk, I get this doubt. There must be a few mistakes. That's what they are saying. Let's see. So the following financial statements were prepared by a trainee accounts clerk for the business which was started on 1st January 2016, employing 330,000. Employing 330,000 by Sumudu. Sumudu is the owner. And her accounts clerk, trainee accounts clerk, prepared these two. Trainee, no, on training. Maybe don't know. She doesn't know the accounts clerk. She doesn't know the entire process and the way to prepare the financial statements. I don't know. Let's go and see. Statement of profit or loss is there. Income, under incomes, she has put sales 250. Wow, just under sales she has added discounts received. It's wrong. We don't add other incomes to sales. No, sir. No. Under expenses, oh my God, that's the problem. Can you see the problem here? I can see the problem. There's a problem. Under incomes, she has included sales and discounts received. There's no trading account. Where the hell is the gross profit? Tell me. It's not there. And just under expenses, she has included purchases and everything. Purchases, see, this is wrong. Carriage inwards added to purchase, advertising expenses, all in rent, bank loan interest, electricity, discount, all under one common, all under the same list. Purchases and carriage inwards and everything. Yeah, it's wrong. Right? On the other side, statement of financial position, assets, all the assets in one list, non-current assets and current, see, all the assets in one list. Oh my God, this clerk must have been a, well, she must have been a, I don't know, she must have been a bus conductor or someone before she came to Sumudu's business. No, this clerk must have been a pole salesman or someone. No, doesn't know anything about accounting. Well, that's clear, obviously. Otherwise, you don't put all the non-current assets and assets, current assets together, and in the profit or loss, you don't do such a thing. If you know anything about accounting. See, these are non-current assets, NCA, furniture also non-current, but debtors and cash, current assets, no. These are current. Equity and liabilities, capital, net profit, bank loan, creditors, all together. All together. Yeah. So many mistakes. I'll just say that and I'll move on. Okay. Many mistakes are there. You don't add discounts received to sales. This is wrong. You don't take purchases and carriage inwards under expenses. No. And there is no closing stock, opening stock, closing stock. No. Maybe because the business was started newly, there is no opening stock. Yeah, business was started newly, no, which was started on 1st January 2016. It was newly started. So if a newly started business is given to you, there is no opening stock in a newly started business. No, sir, no opening stock. Maybe even a closing stock is not there. See, even a closing stock is not there. No, purchases, carriage inwards. That's it. No opening stock, no closing stock. Opening stock, of course, cannot be there because the business was started newly. Yeah, closing stock must be there, but here I can't see it. Closing stock. Maybe even a closing stock. Without a closing stock, a business can end its accounting year. Maybe even a closing stock is not there, because if all the goods were sold without a remaining stock, if the year was so successful, without a closing stock, without a remaining stock, all the stock was sold, then a closing stock cannot be there. Let's assume that way, and we'll go and see the questions. 35. The cost of sales of the business for the year ended 31st December 2016. Asking for the cost of sales. But the problem is, this clerk has not calculated the cost of sales. As I told you, there is no trading account section. You know what the trading account is, right? This is the trading account section. Trading account. That is the section which is on top of the top part of the profit or loss statement, where the gross profit is calculated. There is no such part here. The gross profit is missing. Where is it? It's missing. It's not there. That means she hasn't prepared the trading account part, and she hasn't calculated the gross profit. So cost of sales even not there. Sales minus cost of sales equals gross profit. No. Oh, is it a different formula? Sales minus sales revenue, sales income minus cost of sales is gross profit. That is gross profit. Yes. But this clerk, I don't know where did she find this clerk? Anyhow, it's up to us. We'll calculate. Right. So we don't have the trading account, the trading section of the profit or loss statement. I mean the top section, top part. Okay. But we have items that we need. We have the opening stock. Do we have opening stock? No, we don't have an opening stock, because the business was a newly started business. Newly started. In a newly started business, children, there can't be an opening stock, because you know the reason, right? Newly started. The reason is, from the last year there is no stock which continued to start with. From the last year there was no remaining stock to be taken as the opening stock, because last year this business was not there. It was started this year. No opening stock. No closing stock. I was searching for a closing stock even. It should be under assets. See, under assets it should be there, but no. Under current assets, this section, a closing stock even, not there. Not even a closing stock is there. Under the current assets, closing stock as at 31st December should be there. Stock as at the end of the year, remaining stock, closing stock. Oh no, I don't have to tell you all this one by one. What is closing stock, what is opening stock, but both are not there. So the formula or the way to calculate the cost of sales is what? The way to calculate the cost of sales is this. Cost of sales equals, cost of sales is calculated this way. What way? You know how to calculate cost of sales. Opening stock plus purchases, if carriage inwards is there, plus carriage inwards, and loading and unloading, everything should be added. Loading, unloading, everything, if given, okay, and minus the closing stock. That is the way to calculate the cost of sales. We don't have opening stock in this question. We don't have opening stock. That's what I was searching for. No opening stock, no closing stock. So we have purchases and carriage inwards to add. That's it, to find cost of sales. To add, I don't know, that's how the question is given. Right? All right, purchases 160 plus carriage inwards 5. 165 is the cost of sales. That's it. Let's go and see. Cost of sales of the business, we have 165 here. That's it. According to the way the question is given, we have to find out, we have to derive the answers from the given information. We have to calculate the answers from the given information. We can't say, opening stock must be there and the closing stock. Now, without opening stock and without closing stock, how can we apply this system, this method? You can't say that. Work with the given information. Only purchase and carriage inwards is there. So, we add those two. And we get the answer. Right. Next, gross profit of the business for the all right. So we'll calculate gross profit too. For the year ended 31st December 2016. Gross profit. We know how to calculate gross profit now, don't we? We know how to calculate gross profit. It's only a simple thing to it's only a simple thing remaining to, left to do. That is what? Minus the cost of sales from sales income. That's it. Now we know what is the sales income. It is given here. See, 250. So 250 minus 165. 250 minus 165. How much? 250, 250,000 minus 165. 165. What is the answer? We can get the answer, right? Can get the answer. How much is it? 0, 0, 0, 5, 8. Yeah, 85,000. This is the gross profit. Check whether it's there. It's there. 85,000. This is the answer. Next, total of establishment and administration expenses indicated in the statement of profit or loss. Establishment and administration, admin expenses. They say establishment and administration expenses, it's the same thing, admin expenses, right? They are talking about admin expenses. Admin expenses. Let's see, let's mark out what admin expenses are there. Under expenses, purchases, not relevant, carriage inwards, we have already taken. Advertising is distribution. Advertising is a distribution expense. It's a distribution expense. Distribution. Rent is an admin expense. Bank loan interest is a financial expense. Electricity is also admin. Discounts allowed is not an admin. It's a distribution, no? Yeah. So we have only two admin expenses. Rent 12,000. Electricity 2,500. There is 14,500. 12,000 plus 2,500. 14,500. Only those two, right? Purchases we can't take. We already took purchases and carriage inwards for cost of sales. Advertising is a distribution. Rent and electricity charges. Yeah. Yeah, that's it. 14,500. 14,500. Let's see. Yeah, it's there. 14,500. This is the answer. 14,500. 37, third answer. Last three. What is the amount of bank interest paid in cash for the year ended 31st 12th? What is the amount of bank loan interest paid in cash for the year ended? Paid in cash. They are asking for the paid amount, not the relevant amount for the year. Paid amount. Paid in cash. Let's see. We have bank loan interest 6,000 here. See, this is the relevant amount for the year, which is in the profit or loss statement, right? This is the relevant amount for the year, 6,000. But we have to now check whether there is a what? Accrued or prepaid? Accrued or prepaid? Accrued is a liability. Bank loan interest accrued. If it is accrued, it's a liability. So let's check in liabilities. We have accrued bank loan interest. We have. Yes. It's here. It's here, see. Accrued bank loan interest is here. Accrued means not paid, unpaid. So now it's clear, right? 6,000 is the relevant amount of bank loan interest for the year. That means the annual full amount relevant for the year. For the whole year, the annual amount relevant for the year. How much? 6,000. Okay. Out of the 6,000, 2,500 is accrued. So 6,000 is the amount that we should pay for the whole year, right? For the entire year, for the 2016 year. But 2,500 is not paid, which means the paid amount is clear. Paid amount is clear, right? 6,000 is the annual total amount that we should pay. 2,500 is not paid, which means paid. Yeah. 3,500. Let's see. We have it. Answer is there. 3,500. Next one. Increase of the equity of this business from 1st January to 31st December. We know that there are only 4. Oh, are there 5? There are 5. Yeah, there are 5 incidents. There are 5 occasions normally, right? I'm talking about occasions that change the equity, occasions or situations or things that changes the equity of a business. 5. No, 4. What are the 4? Incomes or profits increases the equity. Additional capital increases the equity. These 2 increases. Okay. These 2 decreases. These 2 decreases. What? Yeah, that's right. Expenses or losses. And drawings, that's right. These 2 increases, these 2 decreases. Incomes or profits. So, in this business, the opening equity is, how much is the opening equity? Opening equity is given here under equity and liabilities. Opening equity is 330,000. 330,000. But there is a profit. The profit is how much? 56,500. And it is added to the opening equity. This profit of the year is added to the capital. Profits increase capital. 56,500 plus 330,000. No drawings to decrease capital. There is no drawings given. No. No, we can't see any drawings, right? No drawings. So 330,000 plus 56,500. How much? Let's go and see. 330,000 increase of equity. 330,000 plus 56,500. 005. Here 6. Here 8. 386,500. That is the closing equity. Oh, when the profit is added to the opening capital. But the question is asking what? Increase of equity of this business. Increasing amount is this amount. 56,500. When it is added, the capital is increased to, when it is added, the capital is increased to, from 330,000, the capital is increased to 386,000. But the increasing amount by how much? 56,500. That is what they are asking, and we have the answer here. 56,500. Yeah, that is the 39th question. Last question of this paper. Select the answer which shows the total assets and total liabilities of this business as at 31st December 2016. Total assets and total liabilities. Let's see. We have all the assets together as one list. See. Okay, don't mind that. Don't mind. Let's take the total of the assets. Shall we? It's 475. It is given. Under assets, we have motor vehicles 300, furniture 100, so 300 plus 100, 400. Debtors 30, 430. Cash balance 45, 475. This is the total assets. Okay. And liabilities. Liabilities. Liabilities are here. Let's take the liabilities now. Capital is equity amount. Net profit is also equity amount. Bank loan, excluding that section, let's take the below items below. Bank loan plus creditors 50,000 plus 36,000, 86,000 plus accrued loan interest 86,000 plus 2,500, 88,500. We have assets 475 and liabilities 88,500. Let's see. Assets 475 and liabilities 88,500. It's there. Fourth answer. 40th question. Total assets and total liabilities. If you doubt this, let's go and check. There are no other items to take because this clerk is, he has gone nuts. Let's check any assets, whether they are included here in the profit or loss statement. That can't be, no, because we took we took even the net profit here, and the net profit was, we have to assume that it was correct, right? So there can't be any assets or liabilities in the profit or loss statement mistakenly, even by mistake. Only incomes and expenses can be there. So in the SOFP we have all the assets and liabilities. We have to deal with those and take total assets and total liabilities. The only mistake here, actually, this accounts clerk is, she's not a bad person. I'm sure that she must be a good person, but she doesn't know the formats. She doesn't know the methodology of preparing the statements. But the items included are all correct. See, incomes and expenses, all correct. The trading account section is not shown separately. That is her mistake. Gross profit is not calculated separately, and net profit is, you know what I'm saying. She has a problem with the structures, the approved and accepted formats. She doesn't know even here. But assets and liabilities all are included in the statement of financial position. So that's it. Going to the final question, we have marked the answer. With that question, children, we are done with the first paper, 2017 first paper, the last 10 questions from 31st to 40th. I hope to see you again with the second paper, 2017, paper 2. Until then, have a good time. Do your work. Work hard. We can play when we play. I always say, work hard, play harder. Work hard, play harder. But this is the time to work. After the exam, you will have ample time to play. Thank you.